Hey guys, how y'all doing?
Good. How are you?
Fantastic.
Gaines, you need to get some sleep.
Yeah, yes, I do. Don't let this, don't let this physique fool you. It's been quite been a long couple nights. Let's just say that. It's
Yeah,
like
yeah.
I have my phone next to me. Like it's that light kind of you got a baby sleep where or like the second it buzzes, you're like, oh, is that a trading view alert? Nope, it's just a comment from somebody.
Gosh.
So it's been one of those crazy things. How have you guys been holding up this week?
So far, so good.
Yeah, Klaus. So far, so good. Okay, Klaus, you got to be happy. Didn't you have some big trapped longs like everybody else, and able to get a chance to improve the spread, or I mean, I don't know. You don't have to talk about it if you want to, but
Sure, I should have sold at least a good portion of it yesterday. I somehow act differently when I have longs that are red. And I don't know why I hesitate to sell them if they're still red. I should have sold them yesterday, but I didn't. So still better than the beginning of the day yesterday, but
yeah. Well, that's okay. I mean, it's like an investor psychology thing too, where if you hold on, you typically close winners early, and you drop and you hold on to your losers a little bit longer. And by a little bit, usually it's a lot before, then all of a sudden now it's too late. And you're like, well, I don't want to hedge because what if it bounces and then it goes down another 50%, Then they're done that, bought the shirt. So I guess what I would say is, the big thing, because we don't really know what's going to happen here over the next couple of days and weeks, but I still think, the market is pretty bearish in general. So I think one of the things I wanted to at least get started with is I was going to go over like what are some of the next moves and just spend a little bit of time on it, and then talk through some hedging examples. But before we do that, sorry, go ahead. Somebody say something. Okay, sorry, it must have just been some feedback. So I've gotten a lot of questions either through discussion or just in general about like, what comes next, or there's just a lot of uncertainty. I'm getting a lot of, my radar is picking up a lot of, people trying to position themselves for the next major move. And, it's kind of funny how these days work where you have, this big 10% pump, the day before, and then we knew we'd see some selling, but we didn't really know if it would be like a small wave forward kind of thing, like a small pullback, couple percent. Then it kind of turned into a lot more than that, which I kind of thought it would have, because a huge move like that, they don't last long. There's lots of dealer hedging that needs to happen. There's, these things take days to process, and these calculated moves. And anytime we see something like this, expect a lot of whipsaw, a lot of back and forth, and usually it's from day to day, not necessarily like intraday. Sometimes you can see those V-shaped recoveries on days where we have these, like let's say big sell-offs. We didn't necessarily have a V-shaped recovery today, but we had, I think, what is the standard retrace. So what I wanted to show you guys is really just kind of the breakdown of, what these things could be, because there's a couple of paths this could take. But I guess suffice to say that if you were lucky enough to close your longs in the green yesterday, after some pretty bad beatdown, that's excellent, great position to be in. You can always reset the trade, right? You can always reset longs, and I think you'll have an opportunity to do that, or at least improve your cost basis here in the near future. Because I do think that there's a possibility that I'd say about 40% chance we will head a little bit higher than the high we had yesterday. And about 60% chance that we're just going to resume the sell-off. It's kind of like a big fake out. So it's kind of why I was, I think I mentioned about 5 or 6 times over, last 2 or 3 days that, if we had this appreciation of price, try to lock that in and essentially neutralize any further losses. So I consider yesterday like a gift, where, if you had trapped longs, it was a great opportunity to add some shorts and protect those profit recovery. And if you had leveraged ETFs and things like that, you probably didn't recover a whole ton of it, just because of like the daily compounding. And something like TQQQ has been beat up over the last couple of days, and that just compounds with those major moves. the same thing, reciprocal with like a SQQQ today, where we didn't really see like the big appreciation that we probably should have with a 4%, 5%. Oh, sorry, 4.5% move. But we should see that if it does continue, and you should see that. But the long story short here is if you guys had a chance to hedge up your longs and recover some recover some of those unrealized losses, that's a great spot to be in, because nobody knows what's really going to happen over the next couple of days and weeks. But at very minimum, you've gotten a lot better positioned than probably most people are, because usually most people look at these things like, oh, it's a rally, let's go, everybody go long, and then they get crushed when this is like your classic suckers rally. So before I go any further, do we have any questions or anything really burning that you guys wanted to talk about before, I guess, anything else?
Gaines, I have a question about something you said repeatedly today, where you talked about 5,300 or 5,320, I think it was, as a key inflection point.
Right.
So I interpreted that to mean that when the S&P 500 hit that level, it would then reverse its course and head down. Is that what you meant by that?
Yes. Yeah, and that's a good segue here. Let me pull up the chart and kind of show you what I mean by that. And I understand too that like some of the terminology that I use is not consistent, or at least like if you guys don't or if it doesn't make sense, please ask in discussion, because I'll bet you a couple other people have the same question. So here's kind of how this stuff, or like how I come up with these levels. Let me kind of start from scratch here. And sorry, by the way, if my kids come busting in, I'm on patrol today. They've got snacks, they've got water, they got their tablets. We're good for the next 23 minutes, hopefully. So if you hear some rugrats, I apologize. All right, so Gaines, enough about your kids. Nobody cares. All right. So let's take a look at just the S&P, because I feel like it's a good microcosm of like an aggregate of all the other indexes, and they seem to be printing sort of the same patterns, or at least everybody had that big pump yesterday. We can clearly see a 5-wave sort of structure here, which to me means that it was the end of like a C leg. Okay, so longer term, if you look up, I think we talked about this last week too, for those of you who were on the call, or I think it was last Friday. Yeah, man, it's like, it seems so long ago. Ron, I think you actually asked that question. So okay, long story short here, guys, is like we've got this weird looking price action down here, but if you start to dissect it, this is pretty clear to me that this is like a longer term wave 2, or like a B wave up top. We don't really necessarily need to know which wave that is now, because we're more interested in what happens tomorrow and the next week. I mean, yes, it informs that, but we're right in the middle of a pattern, and I think that this is going to be pretty important for us to figure out. So I think yesterday what happened was, we had I think everybody was expecting like one more push down to complete like this 5-wave sort of series. And, really what we ended up seeing was probably one of the biggest short squeezes of all time. And that's what I mean by like your trading history, right? If you were able to survive that yesterday, congratulations, because I'm sure there were tons of margin calls, tons of, people that got wiped out yesterday. I think I mentioned, my fund money account just got liquidated yesterday from the broker. It was only 3 minutes. 3 minutes, we covered it like 1,000 points. That can happen. The mistake I made was not setting a stop. So that's why I always, I'm always going to be honest with you guys and tell you, everybody makes mistakes and you pay for them, but you make less of those mistakes as you march on, and that's really the key. So if we want to try to learn from that sort of thing, I recommend like keeping like a trade journal about like what happened and why, and some of the different like market constraints that have been happening at the time, and that's really helped me as I go back and look at these sort of things. All right, so I thought it was going to be a wave 5 down here, and it didn't really happen. We did see a very, very small breach here of the prior wave, where I kind of think this might be a fake out. Technically, that breaks the rules of Elliott wave theory, but if it's just by a hair, I don't put a lot of stock in that. I think it's like we saw the same thing in the NVIDIA chart, where I'll pull it up here. A while ago, I think I had been showing this irregular sort of pattern on the chart for about a month at least. And, we can see here that it made a new high, just a tiny little new high. And I had been projecting here that we would have like a 5 wave down. So if we look at this, I mean, it certainly looks like that was a correct assumption, but the wave overlapped. So I think here what the takeaway is that sometimes the rules can be broken. It doesn't happen very often at all. I'd say 1% of the time. But that's just one of those things I think that traders play tricks on each other with, especially with like these Fibonacci sequences and things. So with that being said, let's go back to what's happening here. So with bouncing off here, we did have this kind of crazy move up, and then we had another. And this is all based on tweets and stuff. But can you guys see how almost perfectly it aligns here with this 1.382% extension? This is why people ask about, like, is technical analysis like still valid when we have these big market movements? And my argument is absolutely, because I think technical analysis is probably the only thing that gives you enough guidance about where those pivot points are going to be, and then where ultimately the continuation is going to be. It's important to know that, like, I'm happy to update the charts as frequent as possible. But sometimes, like, there's little clues and things that you got to pick up on. And I don't expect you guys to notice that, but these are just things that I try to keep in the back of my mind. So what we just talked about was that little punch through here that kind of, technically invalidates the 5 wave down series. But I don't know if that's really going to be the case. I think that what you're seeing is kind of a fake out here. These levels typically do hold. And if you see here, there was some pretty decent volume that rejected at that level last night. So this to me is a pretty clear finished ABC. And let me label that here so we're on the same page. Well, that's pretty clear ABC to me. Now the next question is, okay, well, where are we going next? So now let's do some other measurements. So the retracement level that I was talking about today, that 5320, that comes from this peak to trough. But first, let's do the higher level. So the higher level retracement, you'd think you would see something like this for a deeper cut. And, typically with wave theory, you'll see, sorry, let me add some contrast to this. So with wave theory, everybody, teaches that, waves move in 5s and 3s. So 5s are impulsive, 3s are corrective, but you can also see those in different capacities with different patterns where they could be flipped. But still the market does move in series of 3s and 5s. So what I think we're seeing here is that a typical ABC retracement takes us down to the 61.8% retracement level. And more often than not, I'd say probably 85% of the time, especially if there's a larger market move, you're going to see exactly what we saw today, which is this tiny little couple point zone where, it's only about 20 points, that kind of thing, in order to hit that level. And you see a bounce. So, once we saw it, I think I said something here where it's like, okay, here might be a good spot for a long at this 50% retrace, but it sold right through it and then kind of, just jetted down a tiny bit more. And that to me is like it's price discovery. You're finding that next large pool of buyers. So that's what we saw today with the buy up. However, I do think it's like it's kind of a fake out, I guess you could say. And one of the reasons I believe that is because you see some of these top wicks up here. But let me now just mark this line. I also mark this line, and you guys can see here down further on the chart, we got this 49.82, which is your 78.6% extension. That's the next target if this 0.1 or 0.618 materializes, which should put us right where the squeeze started, right? And then that's where the bears, I'm assuming, are going to want to get to. So I think what we might see tomorrow with this. Oh, I'm sorry. I don't want to get ahead of myself. Let me get to that. Get to that special level here. Let me pull up 5 minutes. Okay, pretty close. Pretty close. This is not the chart I typically have during the day, so it's a little, it's a little different, only by like 2 points here. But still, I guess the main takeaway here is that we saw this big sort of ABC looking thing, and you want to measure from the start of like the B to C wave here, like what that retracement can be, because ultimately, I think what we might see is like a 3-wave down sequence, where this might just be a high wave 4 retracement, which is entirely possible. We've had huge moves, so I don't see any reason why you can't see another sell off here in order to get down to this 5091 level, which is that longer term 0.618 retrace. So I want to stop there. I know I've talked a lot about talked a lot of numbers. Is this making sense so far? Or am I going too nerdy on you guys?
Hey, Gaines, this makes sense for me, but I'm wondering what is the alternative pattern for this? If it's not a wave 4, what would it be?
Yes, that's a good question. If it's not, then I think we have a solid case for a longer, more severe ABC. So something like this, where it could probably go on and extend to this level. It kind of looks like A equals C. Let me measure this. Yeah. So right now, it's not as close as it should be, but I bet you if you pull it up to the 786, it will be, or pretty close. Okay, yeah. So right around this area, this like 5360s zone, that could be an A equals C. So I'll just kind of I'll kind of freehand it here just so you guys can get the the illustration. So looking at this is the alternative pattern. I'll show you guys the bullish setup in a second here, but to me, this is an entirely plausible sort of thing. Now, there's another thing we could see, and thanks, Jake, for bringing it up here, because I need somebody to help me keep me on task. So, I bet you if we measured this from peak to trough, you would see that this some sort of extension level is probably going to align pretty well with what I was just talking about here with that A equals C, because this is a major fib level down, and that these things line up pretty easily once you know what to look for. So there's a possibility here tonight that we would see some more bullish behavior, where let's say we have another one of these. Let me just get this off this side. Like we might have a night of a night of buying, maybe, where you see one of these deeper cuts, and then you just see a C leg up, kind of like this. And that's, to be honest, I kind of think that's what we'll see. Another reason why is because this is making a pretty good channel, and I can just kind of tell, like you're already starting to see a bit of a channel line here develop, and a test back down here to these levels is most likely gonna give those bears another really high target to sell up at this previous point of control. Does that make sense so far? So it's like you see a series of these ABCs in a channel. You'll see five touch points. So if I go into this a little bit further, so right now we see here. You know what? This is probably going to be easier to see this. It's like 1, 2, 3, 4, and then usually you'll see the 5 that resolves to the downside like that. So now that we've got this sort of sort of mapped out, that's kind of what I think we might see. I give that scenario, look at all the buying now. I mean, I give that scenario a pretty high probability. So what kind of I guess, like, am I crazy? Do you guys have another thought, another scenario that we could explore?
Well, that's very helpful. What you just drew there, Gaines. It's helpful to me anyway.
Okay, good. Yeah, and really, guys, like, the time is yours. So feel free to ask. Feel free to jump in and because I want to make sure that you guys are prepared for any eventuality. Like, I guess it really depends on your risk tolerance. So, for example, if you went short up here, expecting a decent short, I mean, that might develop because we could be showing like a head and shoulders. But another thing that I mean, these head and shoulders are pretty reliable, but as we've seen, like, on the way up, the last, I'd say, like, year and a half, what you would typically see with these head and shoulders is kind of a fake out like this, where it would then break the last high and then head up and make like a C wave or a C leg there. Does that make sense? So I guess, like, when you always have like a counter trend sort of rally, I'm always looking for these channels to develop, because at first I look for triangles, and triangles are relatively easy to spot. And as we're kind of developing through the day, like, I'll start drawing lines like this on the chart, and you might call me crazy, but you'll see a lot of these sort of things develop. Like, this could be a pennant, and then it could just be sent down really, really quickly. But I think, like, the main takeaway here is that we did bounce a decent amount before we hit that 61.8 retracement. And the strategy here is, if you guys had hedged up short up here, let's say, I closed yesterday right around here, and then you guys took some profits today, great. Another thing you could do is wait until, like I said, you might have a decent probability that this will do something like this, and then this is like a level up here around the 530s, or like 350s would be a good level to add some more shorts, and just in case we have some sort of apocalyptic send off. And another thing I want to talk about real quick is that like what happened yesterday. I've never seen anything like that. That was insane. But it was still interesting to kind of think about what might have been the causes of that. It kind of seems like there's some insider, funny business going on. But now that we know that that's like the second time that's happened, like I said before, I think it was on the 4th or the April 5th or whatever, where crypto didn't do anything, but all the indexes sold off 5%. That was a big telltale sign for me that there's something going on. So now I'm trying to read that, or read those tea leaves as well, and factoring that into price action and stuff. And I think the reason why we had a huge short squeeze yesterday was not just because of the tariff discussion. It's just that there are some other things that have been happening recently with fund flows and lots of long positions being trapped up at the top. They needed that sort of huge relief rally in order to be able to exit some of those positions. So that's why I do think we saw a big sell-off today, kind of in this shape. But I also think it's going to continue because that's your relief rally, I guess you could say. It was very, very brief, when in the past you could have had a relief rally that takes months, like in the summer. And I think that maybe it's quick now, or it was really quick because maybe they had some deals with the brokers to make some swaps for shares and stuff like that, because the brokers had to take the opposite position. So if everybody's short, they have to be big long. And if you're trapped big long and the market keeps selling off, the problem is now the brokers are in trouble, and they have to keep hedging their longs. So they're essentially selling into more of the selling. So it just kind of accelerates that tail risk. And in my opinion, at least, and this could be totally wrong, we have a couple of very sharp individuals on this call at the moment. So please correct me if you've heard something different, or if you think that there's something else going on. But I tend to think that, it's like, don't overthink it, and like try, you could get in that sort of analysis paralysis mindset where you're like, oh, well, sure, it could go up a little bit more, but we're not trying to catch the small potatoes moves. We're trying to swing these moves, and we're trying to position ourselves in order to be successful long term, right? Not to be successful only like for a day or two. There are good setups each day for day trading and stuff, but you don't capture a lot of points on that stuff. This is where we make the big money, guys. So if you really want to try to like monetize this stuff, I think that the key again is just patience. So I guess the last thing I kind of want to talk about, and then we can do some questions here, is hedges. So I always get questions about where to hedge, when to hedge, what to do. I can't tell you what to do, but what I can do is, now that we've gone through those scenarios, we can at least make some marks on these charts here for hedges, or what will be good for stops and stuff.
Actually, again,
Yes.
I struggle with one thing before you get into the hedges. I just looking at the storyline right now, and maybe it's silly to even think about that, but is that we have a 90-day pause in basically most of the tariffs. And so the situation should not get as bad anymore as it was just a couple of days ago.
Yeah.
So, and there was a decent amount of buying at the bottom. There was a lot of selling today, but there was definitely a lot of buying yesterday. And I just can't believe that that's all just retail. And so all of that says to me, it was worse 2 days ago. It's not great, but it's better. And it can get a lot better, but something else needs to happen for it to get worse. With this administration, sure, that could happen, but just the setup right now with everything we do know is pointing up to me. I don't really see a good case for things pointing down. So, and I could see this as a 1-2 where we're now on a wave 3 up.
It's a very good point. So I guess what I wanted to say about that is we're talking only maybe like the next couple days here. If I zoom out on this, so it does look like a 1-2 setup. You're right, but it hasn't quite touched that 0.618 retracement yet. I mean, these are still very large moves. I mean, if you think about what happened, if we go from where we are now, I mean, that's still 3.3% down. That's huge. And if we had a 3.3% down day any other day, it would be big news, right? But not anymore. So no, I agree. I think that what we see here is the potential for a 1-2 setup. And for those of you who aren't like a savvy with wave counts and stuff, the 1-2 setup is like a classic, wave 1, 2, 3, 4, 5 kind of thing. I do not think that we will have, I do not think this is the start of a wave 5. I know, Fred had mentioned something like that in the Inner Circle channel today, but that's just because, it's easier to draw the 5 waves and forecast up because markets are always generally bullish. But I think enough people have been scared out of the market, and enough people have lost enough money where they're not going to be so eager to deploy that capital again and to buy into longs. Now, I think what will take some time is developing this bottom and trying to like piece everything together to accumulate some more shares where it makes it more, I guess, like worth it for bulls to keep pushing it up. So while I don't doubt that longer term, there's definitely a case for an appreciation of prices. Doing it this way with just a giant short squeeze is not the way to do it. It's manufactured. You already saw half of it get sold down anyways. That's just major market moves trying to screw people. But so I guess you could also make the case that typically a 1-2 setup, it'll bounce at this 618 level, and you should see a lot of bullishness. Leading up to it, you should see a lot of the bears having to try really hard to get to that level. But another thing we'll have to look at is if we see that level pierced by, let's say, a couple of points, and we don't see a lot of high volume, then I don't have confidence that there's going to be a bounce right there. I think that it'll continue down like this white sea leg here. And that's kind of where, I mean, you could still have a 1-2, a nice 1-2 setup here. And, I think if, if things really are being manipulated, this would be a really, really great sort of entry. If we sold down a little bit more, everybody bought a bunch of puts thinking it's going to collapse again. And then this is right where, the hero comes in with the cape and saves the day. So that's kind of where, I'm thinking that, we might see, if we do see more selling is what I'm saying, then, and if it sells past the typical like 1-2, setup levels, then we may have a deeper cut. But then also I would kind of treat this as like a very solid kind of buy zone. And then, you would want to set some stops, let's say like, I don't know, below the low, or, at least like, so you're comfortable enough where you might be able to feather in some longs and stuff. And it also depends on like what's going on, right? So we can see massive volume over the last couple of days, but, I guess I don't want to, talk too much about it because we're already, kind of out of time here, but, once we get a few more days of price action to fill out here, I think that we're going to get a lot better picture of what's going to come up here with, at the end of April and then May, because typically May is a bad month, but, just longer term, it just doesn't look like the C leg, longer term here is finished. In the longer term C leg, this is what I'm talking about here. C legs typically don't truncate. Sorry, one second. These C legs don't typically truncate. And if it's disturbed by a squeeze, something like that, we did have a very, very deep pierce here of this, 1.382. And in my experience, usually that means that we're headed down to this 1.618 level first, before any sort of, like appreciation. And just to kind of model out like this sort of scenario, because I know a lot of you, I guess I just want you guys to be prepared. Like there's a lot of speculation, but there's also a lot of junk out there that might kind of take your eye off the prize. So make no mistake that this is a very, very dangerous market to trade anything with. And, if you're trying to make directional plays, really just be careful with setting stops and choosing, more general levels to go long and go short at, because these little like intraday micro moves and things, they're going to wipe you out if you're trying to day trade it. It's, the swings are just, they just mean too much. There's too much of a percentage move that, can really drain an account. So, I just want to kind of set you guys up for, like just to speculate, I guess you could say, you could have, pretty violent sort of, ABC, because the Bears got to be mad, they just lost a bunch of money. So you could have a pretty violent sell-off. You could have even, down to 4,500, which I think is realistic. I mean, the symmetry lines up pretty well. We did get really close to this. This is the 50% retracement for the entire range. And this might just be one wave. And then let's say after May, we could see this, this sort of recovery like this. So I think the, like into summer when, trading is kind of boring and, like lower volume, I think that these guys want to get all this stuff out of the way here and set up the summer just for, their Hamptons vacations and, just try to get a lot of the big moves out of the way. So I think long story short here is that this is going to be, if this does happen, it's likely, but if this does happen, I think we will, we could see something like this, like an inverted head and shoulders where people, will go long on the C leg and we can drive up the markets. Now this is where I would consider that like 1-2 setup. Not necessarily here. I think it's just too soon. I mean, the 1-2 setup doesn't take only 2 days to materialize. We're talking, it takes usually about like 2 weeks of accumulation. And more about like the price action down here that we see. You see like this clustering down here. This is definitely accumulation. You could see it during that night. And I think I posted something about that. And you could also see it here too. But this is also where somebody bought $1.3 billion worth of premium in order to force a market rally, force the dealers to hedge it, cover it. So somebody was trapped real bad up here and needed to get out. So I guess I say all that stuff because you can see longer term these sort of structures develop, like these sorts of waves. where, it's just another high and tight wedge. So I think, like we said earlier today, we could easily see, a move up here to the point of control, or, that other retrace level that we talked about. So I guess it really just kind of comes down to who's going to win. This pivot point that we're at right now, where I do think we will have another push down, and I think that we will test this area, at least the 61.8% retracement. And this can translate to the other indexes, of course. But I think we'll have just another little push down yet, and we'll kind of tag it. And I think that sellers want to see what the buy support is at that level. And then that's a great case to, send it up higher. Now, because tomorrow's Friday, and we don't really have any tariff news or any of that we expect, or any other saber rattling, I guess, it's highly likely that we might see a strong update tomorrow, where we just tag this little level and then it shoots up. So that, I think, is a pretty possible scenario if this level holds. So hopefully that makes sense. I'm trying not to, I guess, over explain it, but I think I always do. So just ask my wife. I won't shut up. So I mean,
Yeah.
that was sorry, go ahead.
The small moves are sometimes totally over the top of my head, like this for me. This makes sense to me. And what would be the alternative scenario if it's not going to result in a C leg up like this? Because I want to see this, right? This looks good for my portfolio.
Yeah, yeah, I'm sure you guys have some
part.
Yeah, and that would help with PQQ, that's for sure. So I think what you might see here as an alternative is that this rally kind of stalls, because typically when you see a downtrend like this, and I still do think that this is like a ABC down, or could be like a zigzag sort of correction. Anytime you see an ABC up when the normal move is down, likely you will see, if not a full retracement, maybe even a new low. So I mean, like for example, you could see like a 5-wave down, which would, in my opinion, like complete the sell-off. You'd see something like this very, very quick. These wave 5s can be pretty violent, where instead of the market going up tomorrow, you could see this sort of bloodbath again, and scaring everybody else out of longs. And that would, I think, wipe out enough people where you would see a lot of accumulation at the lows, like this wave 4. And then you would see a much larger push up, where you would see this, potentially this sort of move again. Does that make sense? So this is, I would say, the extreme scenario, the extreme case. But just in my experience, I kind of feel like this is what I'm leaning towards, even though I don't want to scare the crap out of people. But this is kind of what I think is going to happen. Despite the news and everything, I just think that the yields have, the bond market's been totally wrecked right now. That's the bigger news. But if that doesn't get as serious, I think we'll probably just see something a little bit more controlled, like something like this, if that makes sense. So I guess it really kind of depends on the next couple of days, whether we see a violent sell-off in order to reclaim some of those shorts that were abandoned, or yeah. So Ron, you got something?
Yes, when I'll ask when you finish your thought there.
That's okay. I was done.
Okay, so tomorrow morning, before the market opens, we always hear what the futures are telling us at the beginning of the day. In your opinion, Gaines, with your experience, how much weight should we put into the pre-market moves before the market opens at 9:30? If the Dow's up, and the S&P is up, or the Dow is down, the S&P is down, how much weight should we give that report on the futures? I guess that starts around 7:30, 8 o'clock in the morning.
Yeah, so that's a really good question. I'm definitely glad you asked that, because futures, in my opinion, futures typically set up the next day for the market. So if you see, let's say, futures tomorrow morning are very low. Let's say, we're kind of hovering around this, this 50.92 level, which is that 61.8% retracement, right? But we know that that's a good buy point if it doesn't pierce that level. So if futures open up and they're right around this level, right at the bell open, you'll probably see a lot of buying, and that should kick off like a C leg, if that helps. So like we might see this. I think I drew this before. Just this sort of channel line here, where if we do see this ABC, I think this is actually a very likely scenario as well. So something like this up to the point of control, where we're in this. I guess in this view, we would see something sort of like this. I mean, like the A equals C, like that doesn't need to apply in some sort of like triangle or like a wedge sort of consolidation. Normally, you see overlap with that. Sometimes you'll see A equals C, but not likely. So I guess just to answer the question, what I would be looking for is if futures open lower, it's probably a buy day for Friday. But if futures open higher, let's say we have the alternative scenario where we now have, so we just talked about this ABC up here, and that's again kind of like a hallmark of, that's probably it for the rally for now, but could be wrong. I'm wrong often. Just ask my wife. Don't tell her I said that. You're in trouble. All right. So, Ron, one of the things I'm really looking for tomorrow is, and I'm going to highlight these levels here. I don't know if you guys want to write them down, but again, if markets open up lower, I'm looking at this like 50, 90 level, then that should be a buy. If the markets open higher and we see this sort of ABC move up from the bottom, which is entirely possible, and this might even be a little too short. It might be like, it might be sitting up here. But this to me would be a short where, you could see this sort of that 5-wave series take place that I showed before. So you really want to be prepared for both scenarios. So either we could see this like, this 5-wave down over the next couple of days, or we could see this ABC just make it to that lower, fib level that I showed you guys before. And then that would be a buy, because you would start to see some trend line support there. And you could make the argument that it would be it could be like a head and shoulders pattern too. So something like this, I think if we kind of, go head back, I feel like if we head back down here, make a new low and then bounce up, like again, if futures open low tomorrow, it'd be a buy. Everybody feels a little bit of relief because, everybody got some this week, shorts and longs. But this to me is a very bearish pattern if we are to see this materialize, because more often than not, you're going to see this breach, retest, and then head back down. And doesn't that kind of look like a 5-wave down? So, yeah, well, it happens. And I just want you guys to be prepared, but I also want you guys to make a ton of money. So I think that's the objective, right? And not get blown out. So I think I got time for like one more question here, and then I gotta do some kid stuff and wrap up the day. Is this helpful to you guys?
This is really helpful. Yeah.
Great. Okay.
Yeah.
Very much
Yeah.
so.
Because we are gonna get the futures report before the market opens,
Right.
and so that was helpful to alert us to what could possibly happen. At
Yeah.
least
And
in the
I'm
moment.
sorry, I didn't mean to interrupt you. Go ahead.
Well, I was saying a bunch of us will be listening and watching the futures report 8 a.m., 8:30. And so what you said, I wrote it down, that if, the S&P is down in the futures report at 8:30 in the morning, Nasdaq is down, then you're saying it would continue at the open.
Yeah, or like like futures kind of sets up the day, so it's more of like you can kind of see a ping pong between these two levels that we've highlighted, where I think most of the action is going to be in this zone tomorrow if these levels aren't breached overnight. So another thing I would say too is that because a lot of people are going to be deploying a lot of capital tomorrow. Definitely don't go in like a wild man, like a riverboat gambler, so like I could see Ben down there laughing. But I wouldn't go in there whole hog, because you never know what can happen. You could see a big buy up and then it reverses on you, and like the first hour of cash market is very, very volatile, and that's kind of why I don't really publish a lot of charts, because I don't want to give you guys poor guidance when you guys have big bucks on the line. So I try to kind of stay out of it a little bit until the buyers and sellers it kind of achieve that equilibrium where the price action is a little bit more favorable to trading. But yeah, I mean, if you're talking about making like larger portfolio adjustments, I always typically try to make those at the end of the day, because you can always tell if there's like a bearish close or a bullish close, that kind of thing. Sure, you might miss a couple points, but if you kind of feather in your longs and shorts, that's going to be I think that's going to be the key to keeping a good handle on whichever direction it's going to go. And that's where a lot of people get blown out when they just pull the ripcord and just buy all, they get wrecked. So hopefully that helps.
Oh, definitely.
Any other questions, guys? Okay. All right. Well, I guess we'll sleep, and tomorrow morning go get them.
Good night. Have a good one, guys.
Thanks. Have a good weekend.
Thanks,
All right, we'll talk to you
Gabe.
later. Have a good day.
Thanks.